Alright, long time no talk. We're gonna go over a couple trades. Two losses, one win over the past 2 days, and just how I saw the market and the trades that I took. So this is, we're at 8 a.m. on the 15th of January there. So the last couple days we had a push down in the market, breaking our demand levels here. So the way I see this is we're in a sideways range according to our rules, like this. When we're at the top of the range, I want to sell. Bottom, I want to buy. The only supply that I'm looking at in this range that stands out is just this upper supply, the supply that started the move. I would draw it down to the top of this wick. The sellers could be in anywhere in this area. Now let's look what we have for demand. Just starting from the bottom, we have demand here. I'm gonna go under that wick right there. That's where those buyers are. Whoops. More demand in here, more demand in here. The area I'm most concerned with is like where the imbalance departed. So somewhere right there. And then this is another quick pause and a good departure there. If we didn't get a reaction from this zone, like if we came down here, I wouldn't trade in here because of all these wicks. I would look for the bottom originating zone. Okay, so coming into the open, this is at 7 o'clock time. We're going to move it forward a little bit on the 5-minute. We have our demands marked, and we're coming into our supply, hourly supply, that we're looking at possibly shorting. So let's get to the open. That's right here. Okay, so now we're in our supply. I'm looking at the 5-minute price action, marking the demand levels as we go into it. I need to see that demand break. So now I'm looking at this demand. Let's see what happens. It breaks. Okay, this demand breaks. I want to get rid of this supply just because it's in the way. This demand breaks. Now we're looking at this supply. This candle went down, broke this demand, and then came back up into the zone. And I had a poor entry. I kind of chased it back down. I should have had a limit order here. But anyways, we enter off this supply. Test a little higher. On this candle pushing down, I'm break even on my trade. So when I enter in this on this trade, our stop is above here. And 450 is, I chased it down, so it's actually a pretty poor entry. We entered down here. So on this down candle breaking this low, we broke even. Now our stop is at 450. And we get out there. So now we'll keep moving forward in time. Here, we break this supply. So now we're going to swap it around. We're looking at this demand here. This is a pretty big zone, but that's the area we're looking. Break it. Okay, we have to swap it around again. This happens. This is reading price action. I don't want to take a long here. I want to take a short. Once demand forms, I'm sitting on my hands. Now, supply formed. And we enter at 7,008. That's right here. So we enter on this supply. Our stop once again. One tick above the high. Going forward. Boom, boom. We come up. I always add, if at the end of the day, this high is all I care about. So I'll always add like a freebie contract, $5-10 risk. that to me is worth it. Pauses for a minute and I eventually get stopped out. So that's it for today, or this day. One break even, one loss. It was about 4.25, 6.5 point loss. And then if we go forward in time, we eventually do see that move down into the demand we're looking at. So we do find this trade later on in the day. I'm just playing video games. So we'll go to the next one. All right, this is our picture coming into the next day. This was the move down we were looking for the day before, but we got stopped out. Never caught it, but that created our supply we're looking at right here. So coming in the morning, we already had an overnight retrace into the supply. And right here on this push down, we created more supply. So now I'm looking at this. Something like that. Okay, this demand right here, we tested. I wouldn't buy there now. So as far as buyable areas, I'm looking at these. Sellable areas, I'm looking at these. This is the retest of this. But we're at the top of our range, and I'm expecting to roll over to buyers at this point, somewhere down here. Also, open interest at this time was like 69.50 or 69.70, somewhere around there. So this is the hourly picture. We want to sell this zone or buy one of these. All right, this is the 5 minute. These are our trades from yesterday. Came up overnight, created this supply that we want to sell off of. Now we're coming into the morning. Price paused, moved higher. One thing to point out on the 5 minute here, see this move down? That's aggressive selling right there. That's more selling than we see in this whole overnight move up. Boom, that stands out to me. So, but we're coming into the open in this area. I can't just jump in. I need to see current price show me that. So right now, current price does not show me that. Current price shows me demand right here. So on the open, this is what's happening. This is the picture I see. Let's walk forward. Boom. Beautiful. This is no longer demand. It is supply. Okay, I'm going to get rid of this. This is our hourly. We're already in it. We're reacting. I know that now. This is the level I want to sell. Boom, right there. 6,997.25. That is right there. We enter. Okay. And our stop is one tick above the high. I don't know if that's one tick, but that's the rule, one tick. Entered, boom. On this candle down, we are break even. Boom. Let's move this down to break even. Right there. Okay, so we sit through. We're expecting this red line right in the middle. This is the dead center of our hourly range. So we're expecting buyers anywhere below here. So I want to see how price reacts. We pop up. You can say this is creating demand, which it is, but the sellers now are here. Okay, so if I want to buy, I need to see something happen to these sellers. Pause, break low there. Our sellers move lower. Oh, hang on. Break low there. Our sellers move lower. Okay, if it wasn't a Friday, if I thought if this trade was at a better price, a little higher like yesterday, this would be an add to our position. We would add 1 or 2 contracts depending what price gave us, and our stop would be moved above this supply. That's not what we did. We had open interest down here, buyers potentially down here. So I wasn't going to add. Also, this price, this supply is almost right in the middle of our hourly range. It's not where I want to be adding. If it was at a better price, I would have. But we can see we come back into it. Would have been a good add, move down. Now on this move down here, I want to start trailing because we're getting to our buyers where I expect a reaction. And this is now an aggressive 3 bars down. I'm trailing prior bar highs. Prior bar highs. This candle forms, closes. One tick by the high of this candle. That high is 66.75. That's where it is, 67. Boom. Get stopped out at 67. And right in demand. I don't know. I don't know if it's going to completely reverse from here. You know, that's what reading price action is, but that is the trade. We eventually do break this. That's what I'd be looking for. And kind of chop around the rest of the day. But that was the trade for the day, kind of playing off the same levels and reading current price action. Oh, you can see another break even over here. That's just kind of how it goes. Break evens, little wins, little losses. Beautiful trade. Mistakes. If I was paying attention this day here, we would have jumped on that train. If this was not really a mistake, if I was more aggressive, I add here. There's really no reason not to. But hope you got something out of it.